Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, as you probably already know, is President's Day, which means the stock market is closed. And this gives us a great opportunity to talk about some fun and interesting topics. And today's topic, I want to really discuss overvalued versus undervalued. What does it mean, and what are the ways that you can define it, and whether or not it really matters. This is all because of a discussion that I had on public. It was a good discussion around Tesla. Tesla at the time was up like 70%, 65% or whatever it was, and someone instantly commented like, well, hey, Tesla is overvalued. So we need to break down, what does it mean to be overvalued and whether or not it matters when you are looking at a stock. Now, contextually, and this is not just about Tesla per se, but contextually, Tesla's down 65%, was down 65% last year. So think of it like any item, a MacBook, a phone, something that you thought was overpriced and it drops by 65% and it's still overpriced. Like, what does that really mean, and how can we use this as an investor, and whether or not that is important? So value, whether something is valued or undervalued, all comes down to what the price is compared to what you value the stock at. So something is $100, but I value it at $1,000, that is undervalued. And the thought here when it comes to the stock market is I can buy it low and then sell it when the market realizes its true value. All of this is really a spin off of The Intelligent Investor. It's basically Warren Buffett's philosophy on investing. You calculate the value of an investment, a stock, a business, and then you buy it at what you think is less than that value. Therefore, it is undervalued. Overvalued, on the other hand, is, hey, the price is too high. There's no way I'm going to pay for this because I think it is valued here. And at some point, the stock market is going to realize that, and I'll come and buy it at the price that I feel like is valued. Here's the issue. Most people, not all, obviously Warren Buffett's not one of those people, but most people have no good metric to say what is valued or what is overvalued, or what is undervalued or what is overvalued. For example, and you can just go and type this in Google, every single year you see someone who says that the stock market as a whole is overvalued, and therefore they're going to wait and not buy anything. And then year after year after year, with the exception of last year, the market grew and it kept growing. And at what point is it undervalued, right? And even last year when the market was down close to 20%, nobody said, well, not many rather, said that this was a perfect point to buy. They said, oh, wait until the market bottoms out, wait until things start to come back. Well, we're already in February and the market is already up and the market has already started to come back. Now, I can't guarantee you the rest of this year is going to be the same. I hope it is, but we're just like making up these lines and making up these rules in terms of what's valued, what's overvalued, what's undervalued, and everything in between. So here is one metric. Now, I did an entire video on different financial ratios that can kind of help you to do that. Financial ratio is basically taking one number, dividing by another number, and giving you a third number, and you kind of use that number to guide you. So today I'm going to talk a little bit about PE ratios, one of the most common ones, but not the end-all be-all. Also, financial ratios are usually using the numbers that are given to us from the company, whether it's, how much money did you make, how many shares do you have, so on and so forth. All right, so price to earnings is basically what is the price of the stock compared to how much money you are earning. And the thought here, and what most people do, is try and find PE ratios that are relatively low compared to its competitors. The S&P 500 last year, the average PE ratio was 25. So if I'm looking at just a general company out there and it has a PE ratio lower than 25, boom, that is a company that is likely undervalued. I can buy it, and hopefully over time it becomes more valuable. I can sell it for a profit. That's the thought process. I'm gonna go through why that might not be always the best thing in the world. So when it comes to Tesla, right now, the time we're doing this video, the PE ratio for Tesla is 65. Now that would suggest, compared to the S&P 500, it's overvalued. However, we always want to compare it to its peers. What are the companies out there that do what Tesla does, or at least gets close, to give me a better indication on whether it's valued, overvalued or undervalued? An example is Ford and GM. Now right now, Ford, their PE ratio, I'm gonna let you guess real quick. This is your time to kind of throw out a number, get something in your mind, is 5.75. Okay, Tesla's 65 P ratio, Ford is 5.75. And then you have GM, just throw a third one out there. GM is like 6.05 for their PE ratio. Now this would tell you right off the bat, Tesla is extremely overvalued compared to where Ford and GM are. Now, I think we can all agree with that, right? The average PE ratio is 25. Okay, got that. Check that off for last year for the S&P 500. All these companies, I believe, are in the S&P 500. Tesla's way up here at 65 for the P ratio. And you got Ford and GM under 7, right? So yeah, Tesla would be overvalued. Now, here's the other part of this. If I am a regular person, which I am, and I'm looking at this, I know that Tesla has different issues than Ford and GM right now. They are totally electric. 100% of Tesla cars all the time have always been electric. Well, GM and Ford are not. We did an example where Ford came in second place for producing 50,000 electric vehicles last year. Tesla produced like 300,000. They're not the same right now, right? That yeah, one company producing 6 times more vehicles than the next. So are they really the same businesses or not? That's a question that you can continue to answer on your own. But here's the other thing. Does it matter? Because year to date, right, the whole year of 2023 so far, Tesla is up about 70%, and it is quote unquote overvalued. Well, if I look at GM is up about 28%. It is outperforming Ford, which is the most valued, right? The most undervalued is the one that, you know, this would suggest you should buy, and then Ford is only up 10%. So does it matter or does it not matter? And then when I zoom out over a year, the numbers are just kind of at random. So the truth is, in most cases, it doesn't really matter whether something is deemed valued or undervalued based on a lot of these ratios, because any quick ratio where you can just, you know, add, divide, subtract something real quick and get an answer, it doesn't always tell you a complete picture. The reason is there are so many other factors outside of the balance sheet and outside of some of these numbers that will determine whether a stock is going to do well or not. These companies and the PE ratio tells me nothing about what the Federal Reserve is going to do. It tells me nothing about what consumer behavior is going to dictate. It says nothing about the infrastructure bill and how many charging stations they're going to create. That would matter for Tesla a lot more right now than what it would mean for Ford and GM. All of that stuff matters. What happens if there is a battery shortage and all of a sudden Tesla wasn't able to produce the batteries for their cars? That's going to tank the stock, and P ratio is not going to tell me that is around the corner. I'm not saying that it is. I'm just saying that there are a lot of factors that these ratios don't necessarily tell you. So you do need a more holistic picture. So for me, it's almost why you never, and you can go and search the channel. We do 250 videos a year. We've got well over 1,000 videos. You can go back and see how many times, you just type in overvalued and see how many times it even pops up on a video. I don't think you're going to find more than 3. And the answer, or the thing here is, you know, something can be overvalued compared to these ratios and then still do well. There were years and years where Alphabet, aka Google, was overvalued compared to a lot of other tech companies, and it did incredibly well for a very long time. So just because it says it's overvalued or you think it is overvalued doesn't necessarily mean that it is. All right, so that is it for me today. One question, or not question, but programming note. I will be out of town this week, so I may be wearing this exact same thing for the next few videos because I want to get some of these out in advance. Also, you know, the members only is still open. We'll also be dropping a new video there at the end of this week. And then when it comes to the videos for this week as well, some of them might be screen capture. I haven't recorded them yet. I just haven't gotten around to it. Okay, it's a lot of content. So we'll see whether or not, like, some of these will be just like this and will be conversation like normal, and then some may be straight to screen capture because I can do those on the road. Those are a lot easier to do sometimes. So we'll see, depending on what topics you need me to cover. If you need me to cover a topic or you have a question, ask it right now under this video so we can do it at some point this week. Okay, if you wait too late and you don't comment, you have to wait till next week. Okay, so make sure you join members only here, and we will talk to you, or I will talk to you rather, on tomorrow. Talk to you later.